Over the next 48 months, I believe that Cardano will catch up with Ethereum's current market cap. This would mean a price per coin around $8 to $10. In today's video, I'm going to explain my prediction in detail, breaking the content into three primary segments: network volume, decentralization, as well as blockchain security. Now, I'm not including scalability in this list just yet because basho has yet to be launched, and there are some network congestion difficulties currently happening on Cardano. So it'd be unfair to make this comparison when Cardano hasn't even launched its scaling solution yet. But I know that the foundation does have a solid roadmap to scale the network and solve these problems. And it's also important to note that these issues are being caused primarily by high transaction volume, which is actually a good thing over the long term. It means people are participating in the network. So let's just jump right into it. Cardano's transaction volume is already competitive with Ethereum's, which not only tells us that there's a high level of user participation on chain, but it also lets us know that Cardano may be undervalued compared to its sister blockchain. Ethereum has a $300 billion market cap currently, and Cardano has a $30 billion one, which leaves us with the question: if transaction volumes are already similar between the two chains, why is Cardano not already as big as Ethereum? Now, there's a few answers to this question. Scaling is one challenge the network is currently working on, as we've discussed, but it's also important to note that Ethereum had a 3-year head start on smart contracts. So the bridges are still being built to port over key smart contracts from Ethereum to Cardano, but once this happens and the scaling issues are resolved too, there's no reason why Cardano should not be as big of a network as Ethereum, especially when you consider how much more decentralized it is. Speaking of this, let's jump into our next topic, which is of course decentralization. Cardano is significantly more decentralized than Ethereum. It's not even really a question. Cardano's stake pools and delegation system provide multiple layers of network encryption as well as non-custodial methods for participating in the blockchain's inflationary mechanism. Also, stake pools have low barriers to entry. For example, setting up a Cardano stake pool costs about $1,000, give or take, whereas setting up an Ethereum, Solana, or AVAX validator costs over $100,000 to start. Cardano also allows users to participate in staking without ever losing access to their funds. The stake pool you delegate to has absolutely zero control over your stake, and you can withdraw your funds at any time. Because of these factors, over 70% of the total Cardano supply is currently in active delegation, which is incredible, especially when compared to Ethereum, where less than 10% of the total supply is being staked. Also consider that most of Ethereum's validators are centralized and run by exchanges, whereas Binance is the largest centralizing force on Cardano, and they only control about 11 to 12% of the active stake. By the way, if you stake with Binance Earn, you are leaving money on the table and harming the network that you're invested in, so definitely consider moving your Cardano to a yoroi wallet for higher returns. It's really easy. Just click the link in the card above to be taken to a video on that topic in particular. Now let's discuss our last topic, which is network security. Cardano uses the Haskell programming language, whereas Ethereum uses a quasi-clone of JavaScript called Solidity. Now, Solidity is easy to code on, but has some serious drawbacks when it comes to network scaling and security. Haskell has more advanced programming tools than JavaScript, which leads to better encryption, but also because of this, Haskell has a bigger learning curve and can be more challenging to program on. This is part of the reason why it's taking so long to move those smart contracts from Ethereum to Cardano, because it's like forcing a square peg into a round hole. Developers, for lack of a better term, need to sand down the rough edges of these smart contracts to make them compatible with the robustness of Haskell. But at the end of the day, the contracts that are developed or moved over to Cardano are typically much more secure than Ethereum's. Ethereum's smart contracts have a long history of being hacked hundreds and thousands of times, whereas Cardano has never had a serious breach in security. So with that being said, I think that's enough to wrap up this video. I really appreciate you guys watching. My approach to Cardano moving forward will be to continue averaging in shares over a period of weeks and months and through any potential bear markets. Remember, as the price goes lower, so does the risk. It's always important to keep a cool head and have a long-term outlook when it comes to investing in cryptocurrencies. All right, guys, hit that like and subscribe button if you enjoyed this video, and I'll talk to you all very, very soon. Bye-bye.